Hello everyone, my name is Wang Xinyu and our group members are Han Xiaoyue, Zhang Zhiyan and Zeng Xianyi. Our topic companies are AirAsia and Malaysia Airlines. The first one is our directory. Our presentation are divided into three parts. The first one is introduction. The second one is analysis in conjunction with annual statements. The last one is conclusions and recommendations. Everyone, our company are AirAsia and Air Malaysia Airlines. My name is Wang Xinyu and I will introduce AirAsia first. AirAsia is a Malaysian multinational low-cost airline headquartered near Kuala Lumpur, Malaysia. It is the largest airline in Malaysia in terms of flight size and destinations. They are located at the low-cost carrier Terminal K2 at Kuala Lumpur International Airport. In Simpang, Selangor, Malaysia, AirAsia's registered office and headquarters are located at Kuala Lumpur International Airport. AirAsia has been named the world's best low-cost airline by Skytrax for the 13th consecutive year and has won consecutive awards at the International Travel and Airline Awards, including the largest award for 2022. The company is headquartered in the red zone of Kuala Lumpur International Airport, Selangor. The same facility is also used as a registry.
According to the chart, we can inquire the following information. First, the liquidity ratio is used to measure a company's liquidity and solvency. If the airline's liquidity ratio falls, it means the company is less liquidity and solvent. When a company's liquidity ratio drops, there are several main reasons. If the company's debt to equity ratio and leverage ratio increase, it indicates that the company's debt to funds ratio and liabilities ratio increase. There are two ratios to consider when looking at how well a company manages its debt to debt ratio and TIE. As can be seen from the figure above, since the debt ratio is a fantasy in its counter of a company's debt burden, the increase of the company's debt ratio means the increase of the company's debt burden. The reason for the increase in corporate debt ratio may be increased debt and assist decrease. Airlines can take the following steps to improve their debt ratio. Lessen debt, thus reducing debt ratio. Increase debt to reasons. The chart can represent that this involves three pieces of information: dividend yield, earnings per share, the price earnings ratio. The dividend yield is the company's annual dividend yield. A decrease in a company's dividend yield means a decrease in the company's dividend yield. A company's earnings per share is the company's net income divided by its equity. A decrease in the company's earnings per share means a decrease in the company's earnings per share. A company's price-to-earnings ratio is a fantastical measure of a company's market capitalization, which represents the company's share price divided by its earnings per share. A decrease in a company's P/E ratio means a decrease in the company's market capitalization.
The gearing ratio of AirAsia in 2021 is 1.32%, from 20 2017 to 2020, AirAsia's debt ratio increases year on year. The company's profitability is very pessimistic, and the company has a negative return on equity of negative 9% in 21 years. The market capitalization of the company is also decreasing year on year. The market capitalization is $4.2 billion in 20 years. It can be speculated that if AirAsia's profitability does not improve and the financial markets do not receive timely capital injections, the company's debt and loss ratios will also rise and the company will be at serious risk in the coming years. Based on the findings, it can be concluded that AirAsia has been investing to increase its future profits by borrowing from creditors. AirAsia will maintain its low-cost strategy and customer-focused values. However, expanding into other regions to increase its chances of making a profit. The joint venture with Expedient's AirAsia Expedia, the largest online looking site, is one of the efforts to justify the growth strategy. If AirAsia succeeds in this strategy, it could continue to be ranked as the best low-cost airline for years to come. Nevertheless, unless AirAsia plans to exit a public listing, it is recommended that AirAsia be more cautious in maintaining its earnings per share ratio to maintain investor interest in continuing to invest in AirAsia in the future. With the high equity retained by AirAsia, it is certain that AirAsia is likely to continue to be successful in the future.
The performance of MAS is highly related, and there are both internal and external factors that contribute to MAS performance volatility. When MAS changes its volume and reduces cost, it shows some environment, but external factors such as the government can also affect MAS's performance. Forecasting the process, therefore, external factors play an important role, and internal factors can change at any time. Now, MAS is showing some positives and potential for success as it moving forward and grows. For the focused investment they have made, they see more clearly the vision they have developed and extended to have aviation the industry. With the right strategy and policies in place, perhaps MAS will continue to expand and provide a highly rated and comfortable receives. Thank you.